What's up, y'all? We are back and we are learning how to make $1,000 a day in the Forex market. Today's video, I'm going to teach you guys how to play a little bit of defense, okay? So we've been going over a ton of different examples, how to trade breakouts, how to trade ranges, what is supply and demand, how to use channels, putting all that together to make you guys into consistent and profitable traders, okay? Great traders also know how to play defense. They also know when the market is trying to manipulate them and when the market is trying to take their money. All right. So, as we all know, we are retail traders. Okay. A retail trader is anybody who is not trading professionally for a hedge fund, managing billions of dollars in assets, trading for an investment bank, even your regular banks, Wells Fargo, Bank of America, if you're here in the United States, are all in on this Forex market. So even if we're trading 5, 6, even 7-figure accounts, that really is nothing compared to the money that these guys are throwing around in the market on a daily basis. Okay, keep in mind this is a multi-trillion-dollar market in terms of daily liquidity. So the major market movers have a vested interest in us not being in the market, okay? Because we occasionally could shake some things up. It's just easier for them to make the profits that they want when we are losing money, okay? The best way that they do that is by setting up what is called a fake out, okay? So a fake out is a market manipulation move that is designed to trap breakout traders. So that's essentially what we are. We draw support and resistance. We trade from supply and demand. And when those zones get tested or broken, then we trade the breakout and the retest. All right. So a fake out is when price is accelerating up to a zone that has been freshly created. So in this example, we're on GBP JPY. I'm on the 30-minute time frame, just so that we could get a better picture of what's going on inside of the zone. All right, so we're on GBP JPY. Price has accelerated away from this area, so we know that this is a fresh supply zone. There are sellers waiting in this area on the chart. So we're going to mark this off. Excuse me. As soon as price gets back up to this zone, then our bias is it will be rejected again. Okay, so we're waiting on that to happen, and price is shooting back up. It gets in here, and what happens? We don't see a nice, clean, perfect example. Okay, we get a push. It looks like price is going to drop, right? So it doesn't. We get a push to the upside. It actually breaks the top of the zone, a little bit more action on top. So if you're trading this live, right, especially after this candle right here, you're like, oh man, price retested the zone. It got rejected, and you're probably looking to ride this up to the top. Okay. Wrong. That is the wrong answer. Although you would be justified in thinking that this is your classic fake out. All right. So the big boys are basically trapping the sellers here, the retail sellers who have shorts, hoping that price is going to the downside. Okay. And that their stop losses are right on top of the zone here. So these guys get trapped. All right. Their stops get hit. They're out of the game. All right. They're also preying on the buyers now who saw this momentum candle, a break of the zone. They saw the retest, and now they're waiting for price to go back up. And their stops are right beneath the zone. Okay. So everybody gets screwed over by this fake out. Big boys win, retail traders are out, and now price begins to head down. All right. So how could we combat against this? How could you look out for this kind of pattern? So there's a couple of tips to remember. All right. First one, patience when price enters the zone. All right. Especially, man. So this probably took. And let's see when this actually happened. So this took about a week, counting the weekend, to develop. So as price is heading back up, I could imagine the excitement. You're probably thinking, like, man, I'm about to get a juicy sell. So it's easy to get ahead of yourself and get into the market a little too early. As prices entering the zone. If you're a new trader, that's why I use pending orders. I've been trading for quite a while. I've also been trading relatively the same currency pairs for that amount of time. So I know how these pairs react to certain zones. So that's why it's great when you're first starting out to trade 2 to 3, at most 4 pairs at a time so that you can learn their behavior. All right. GBP JPY tends to have a lot of these. It's a real volatile pair. So it's good to trade with wider stop losses and be a little bit more patient when price gets to your zone. So that's the first tip: patience when price reaches the zone. Also, a more technical note: price will sometimes make another push. All right. So be patient and wait for that second push. All right. So a more impatient, aggressive trader would have probably got in maybe right here. They might even have had a pending order, but they would have saw this candle and they said, all right, here we go. Price is heading down. So they would have entered in, and then price made a second push higher, which we see right here, back into the zone and eventually out of the zone. All right. So this guy would have gotten stopped out pretty quick. All right. So that's another thing to remember. Price sometimes will make a second push into the zone, especially if it's a pretty deep zone where you have a nice range. It'll make that second push to grab more liquidity, more sell orders, because a lot of the bigger banks will probably have their sell orders up here so that they could get in at the optimal price. So the market will go up and grab those orders. It'll also, like I said earlier, grab the stop losses of the impatient traders to get them out of the market, get them out of the way, and then price will head back down. All right. So what you want to wait for is for the second push. All right. And then as price grinds back into the zone, now we see, okay, price, that was a fake out right here, because the price would have really kept going, then it would have just ran away. All right, so now we're looking for a sell confirmation. So if you're looking at this candlestick price action here, see if you could find the confirmation I'm about to point out. Give you a couple of seconds. All right, here we go. So I would enter right after this candle. So keep in mind, this is a 30-minute chart, moving a little bit quicker to get better entries. All right. So what we're waiting for is a rejection wick and an engulfing candle, which would indicate momentum. All right. So we have our wick here. This candle tried to make a break to the upside. It did not. It engulfed the previous bullish candle. And then right after that, you see the trend continuation. All right. Now this unfortunately did not go all the way down, but you still would have gotten a nice 50-55 pip gain, which depending on your lot size would have been a really nice come up for a day's worth of trading or half a day's worth of trading. All right. The last tip I want to point out is these moves typically happen after a strong rally. So you see there really isn't any significant pullbacks here. That was a bad trend line. Any significant pullbacks here? I mean, price just goes up, up, up. You have this bearish here, tried to correct, but then the buyers retook control. All right, so your fake out will usually happen after a strong rally. All right, because again, trading is about psychology as well. So you have your retail traders that are saying, well, here's this strong rally. Perhaps this was just price catching its breath. It broke out again and it's going to continue. Okay. There's also just the real aspect of just a lot of buying pressure in the market. So the buyers are just going to try and make one last push, and then price will head back in the opposite direction. Okay. So the ultimate key to fake outs, guys, is patience. Got to be patient when price is in the zone. All right. Try and trade the same few pairs so that you could get an idea of their behavior. All right. And then wait after that second push, and then look for your confirmation to the downside or the upside, depending on what you're trading. Okay. This has been the fake out video. All right. Rewatch this, take notes, go back on your charts and try and find some fake outs. If you just trade currencies, Euro USD, GBP USD, those major currencies. Go back and back test, keep going to the left, keep going to the left, and find yourself some zones, and then find zones that have been faked out. All right. So that mentally, you could have a mental snapshot of what those fake outs look like on the pairs that you trade, because you'll find that just like all these other patterns we've been talking about, the fake outs repeat themselves and they look pretty much the same for a lot of the currency pairs and a lot of the other instruments that you'd be trading. All right. Okay. All right. Go back, do your homework, and stay tuned for the next video.